Hello, everybody. Welcome to another late night fix. Tonight, we have a lot of interesting things to talk about here with where we have going, where things are most likely headed with the market over the next maybe potentially couple trading days, maybe couple weeks, maybe even a month going into the end of October. So, how we doing, everybody? We doing all right? Let's see who we got in here. Oh, there's my buddy Algo. What's up, man? How you doing? All right. So, guys, again, this is a public night stream. So, if you guys wouldn't mind running up the likes on this thing, helps get this information out to some more people here. We have a lot of cool things to go over, a lot of nonsense as well. So, let's kind of see where we're headed over here. There's a couple of things that I want to bring up. There were a lot of things that happened today. We have some comments from banks, central banks. We have an update on how much has been lost over this time period, like $57 trillion. The dollar freaked out. The 10-year was tanking throughout the day today. And we also saw the market rally here. Now, again, if you guys were on the streams with me earlier today, I was like, I mean, we were talking about this morning, right? As that QE news came out, which we are going to cover from the Bank of England, we were talking about this, and I was like, I mean, the market's going to run, but like, what the fuck? That's literally every single second of the day today. I was just like, what the fuck? I basically was just like, this is silly. Like, what are we doing here? Like, literally, this is nonsense, silliness that we're seeing. So, let's first kind of cover exactly what happened for those of you guys that don't know why this is really not a good thing here, and where we could potentially see things going forward. What was the play today? I mean, chase. That was kind of the name of the game today. Not like Chase Bank, but like actually chasing these moves to the upside. That was the play today. It was chasing, which I don't really feel all that comfortable doing most of the time. I like to wait for those retests that we've been talking about and play things off of key levels. And the SPY, I mean, there were one or two rim opportunities, but every single step along the way up, it just looked like nonsense. I also messed up my teeth tonight, which sucked. I was eating and I like cracked it on a thing. Not like my tooth, but like thing behind my tooth, which stinks. You got some nice SPY puts for 10% at market close, sold before trading stop. Nice, man. I mean, you can easily see those sellers come in. Here's the other thing that I want you guys to think about here too. Remember how we've been talking about how the market needs, or big institutional money needs, the light at the end of the tunnel in order to start basically pouring money back into the market in any significant way to bring us back to some normalcy. Little bit less volatility, trends in one direction, and we're good to go going forward. What they've essentially done after today, and if we see more central banks start to adopt policy like this, what they've done is that light at the end of the tunnel is still not there, but they've most likely lengthened the tunnel. Because when you delay the sale of these assets that they have, the bonds, the securities that they're holding, in order, like previously when they were buying these, again, it's to prop up these markets. When they do the exact opposite of what they said they were going to do, which they were going to be tapering or they were going to be tightening and selling some of these assets, and they're actually going back in and buying more of them, that just delays the whole entire situation. That's why I sit here and go, oh my God, this is fucking nonsense, because we can easily like rip the Band-Aid off here. But there's a couple of things that you need to keep in mind. I titled this originally, Stimulus is Back, which it technically is. This is fiscal stimulus, but I don't want people to think that stimulus checks are going out, because they're not. So you got to think about what this could potentially lead to and why this is so terrible. The Fed is in such a catch-22 here. And remember the game of operation that we've been talking about with the Fed. They can't hit the either border because they're fucked on either side. Now let's go through a little scenario here. The Fed is trying to maintain its credibility, and then we'll dive deep into this Bank of England stuff. And again, guys, if you wouldn't mind hitting that like button on the stream over here, it helps out a whole lot. How do you like the title? Kegel? Stop. But here's one scenario that could possibly play out. We've seen an iteration of this play out in England today, but this is what could potentially happen coming forward if these situations actually get worse. It was really having to do with a lot of these pension funds in England. If you start to see it affecting the labor market in the United States and maybe even other countries as well, here's what can happen. So the Fed is trying to maintain their credibility by raising rates and basically telling everybody, fuck off. We're going to get inflation under control. We are the boss here. We're driving the train and we're going to take it to its destination, or the plane, and we're going to soft land it. If they continue to raise rates and we do that scenario that we were talking about where inflation nosedive, growth nosedive, unemployment skyrockets here, well, then you have a situation where it's very possible that one, they start aggressively doing these rate cuts. But if so many people are now jobless and you still see prices relatively high, well, then they could come out with fiscal, like actual stimulus checks again. And then you go back into the same cycle and then you're fucked. So the problem that the Fed is really dealing with here is making sure that they don't send everybody into a situation where you go into this cycle. Like you have normal business cycles. You have the boom, you have the consolidation, it busts back down, and you just cycle the way through. It happens with the real estate market. It happens with all markets. The problem is that what you could end up seeing is these shorter cycles where you have tightening. You have the Fed selling off all these assets that they purchased from the previous round of easing, then they have rate cuts, which then push up unemployment, decrease growth. So then you go into a little mini recession, and then they're like, oh, fuck, we pushed it too far again. The data that we were reading was lagging, which everybody knows. And then they go back the other way and cut stimulus and buy bonds. So it's basically like they're fighting it on two fronts, and they're like, all right, shove some water over here, put out the fire here. Oh, shoot, we put out the fire too much over here. It's growing too much on this side, and it just keeps getting bigger. Nice background green screen. No. But let's kind of get into this situation right here of exactly what the Bank of England did and why it's terrible. So let me share my screen right here. Let me look. Okay. So the Bank of England stepped into Britain's bond market to stem a market rout, pledging to buy around 65 billion pounds of long-dated gilts, their equivalent of like treasury bonds. After the new government's tax cut plans triggered the biggest sell-off in decades. The problem is thousands of pension funds have faced urgent demands for additional cash from investment managers in recent days to meet margin calls after the collapse in UK government bond prices blew a hole in strategies to protect them against inflation and interest rate risks. If you're entering into a position to protect yourself from an interest rate risk, you have to protect the upside, you dum-dums. Now you have a situation which, again, it was a little bit more difficult to see that bond prices like this were going to completely capitulate and that yields were going to skyrocket. But again, nothing is really out of the question at this point. So that's what's essentially happened. Now, here's the way that you need to read this situation and why I am going to continue to just be like, this is so terrible. The fact that they had to step in and do this and buy all of these bonds to save these pension funds, one, means that what we're seeing now is not a decrease in the inflationary pressure. We're not really seeing inflation come down all that much, but we're seeing all of the negative aspects of quantitative tightening, rate hikes, selling off of assets. You're seeing all of the shit. You're not getting the benefit yet. Are you going to? Well, hopefully. But that's not what we're seeing. So what this shows us is that the underlying problems that are actually there are so bad that they had to go back to their crutch of quantitative easing. That's terrible. Now, the reaction off of that was this. The dollar off a cliff. On the 5-minute, went from 114, 113. May not seem like a lot. That's a big move in US in currency. US 10-year treasury yield tanked. So not only did they affect their own markets, it spilled over into our market as well. So this is not a good thing. All it's done is just added more time to the clock of nonsense. Because here's what now is going to happen. I'll call this right now. You guys can clip this, say whatever you want. At some point in the future, most likely the near future, because what the UK has said is that they are going to basically buy these bonds up until October 14th. So if they're going to do this short QE and then stop, what does that provide for us? Well, we know that there's going to be an announcement of stopping quantitative easing. What happened the last time we stopped quantitative easing everywhere? Death candles. So it just gave them like 2 weeks. Like it's that's kind of what it looks like. It may not actually be a 2 week time frame. And I made this joke today on the private streams, but it's true. We went from 2 weeks to slow the spread to 2 weeks to slow the collapse of the bond market. That's essentially what's happened. In unlimited quantities too. True. True. Dumb Money Media, thanks for the super buddy. I appreciate that. What do you think of the 4-hour QQQ? Quantitative easing is juicy. We can take a look at that. If 2008 repeats, I'll have money in hand to buy some properties. What's the salty cracker? What is that? Very true. Exactly. Well, okay, so we can talk about the 2008 situation really quick. Here's the problem. They're not History doesn't repeat itself, but it rhymes. You're not going to see the same thing that we saw in 2008. We will be a generation that will be able to own property. Sure, but property may not be the asset class you want to go for. Ultra MAGA? What are you talking about? Property may not be the asset class that's gonna do well. Why did property do so well? Well, QE, you saw yield suppression over the last 10 years. You saw mortgage rates coming down and property values were going up. Real estate's more a cash flow game. You focus on the cash flow, the appreciation's an added bonus. But yes, Dumb Money Media, we can take a look at the 4-hour QQQ really quick. This is not giving me a sign of really all that much yet. This is probably rimming on the daily. Oh, it's not even rimming on the daily yet. I would wait. I would watch it up to 285.25 for QQQ, $6. Predatory loans, Fed student loans. Yeah, I mean, they're not predatory. It's just the way the system's kind of set up. It's a cycle. It's another one of these vicious cycles where the incentives are out of whack. If the government's going to guarantee the loan, then the universities are perfectly fine with increasing costs because they are actually getting paid by the government, not the student. It becomes a relationship between the government and the student versus the school and the student. So the school doesn't actually care. But the other thing that I've heard is a lot of the mortgage rates, or the mortgage rates, or the mortgages that people have in the UK, they're adjustable. That's not good. Does the SPY go to 380? It can. It's very possible that it does go on this little relief. Thanks for saying that. Wish more people knew why it was so expensive. Yeah, I mean, it's not like real estate's going to be a terrible asset class. I just wouldn't treat this situation the same as 2008. It's very different. In the aftermath of it, I think is going to be very different too. What I honestly think is I think there's going to be a lot of opportunity in things that people don't necessarily see. The bond market, I think, is going to be interesting. TLT, again, what did we say? I don't know if I was talking about this with you guys. I might have been talking about this with you guys last night, but remember, the statement that I was making, I was telling a lot of people about this, is that when these 10-year treasury yields go up like this, there comes a time where large institutional funds will start pouring money into the bond market. Now, depending on how much money actually flows in, if it's enough to actually push yields down, which it most likely will, just by how much is really the question, then there's a giant opportunity out there with TLT. Look what happened with TLT today, and I want to show you the chain of this. I mean, we can look at it really quickly. I mean, these contracts were up, 200% today? Cool. TLT can do way bigger numbers than that on longer time frames. This is just one day, but the 10-year was down. So when you see a lot of people buying bonds, the 10-year falls. The 10-year down by this much today shot TLT up. A lot of the move, though, was in the pre-market. Yo, SV, what up, brother? What's up, buddy? I gave you a like for that. I appreciate that, man. Ho, you guys are killing it on the likes already again today? Thank you, guys. I appreciate that. Freaking tired today, too. freaking tired. This might be a little bit of a shorter one, but I want to make sure that everybody understands this current situation that we are in because it is fucked up. There is no light at the end of the tunnel. There's nothing, in my opinion, there's nothing that the Fed can do to come in and save anything. And what that does is, well, one, you're going to see asset like just normal stocks act super volatile for a very long time. So these fund managers, it's a game of spray and pray, is essentially what they're in. It's spray and pray or cash is really what it's been. And it will probably continue to be like that for the foreseeable future until we get that light at the end of the tunnel. I also saw some other things that were saying that the soft landing is going to be like a really, really difficult thing to accomplish. And I agree too. If the Fed is so asleep at the wheel here that they can continue to raise interest rates all they want, but they have to give something up. Refi is down 84% in the last year. Our only businesses 3Ds, debt, divorce, and debt. Yeah, dude. Nobody. Well, it wouldn't make sense to refi here. And it depends on what you're comparing refis to. If you're comparing refis to the last 2 years, I would say, yeah, 84%. But if you compare it on like a 10-year rolling basis, they're probably going to smooth it out a little bit. So the Fed has to give something up in order to make this happen. What's most likely going to get given up is the same thing that's given up every single time. The financial well-being of the lower class. That's what's going to happen. They can't avoid it. Unemployment's going to go up. Inflation, the prices of things are still going to be high. In order to get this situation back on track, they have to almost Volcker it, which they're technically starting to do right now. But they have to give something up. I mean, the U.S. has started to give up their bond market in favor of the currency. Well, that's depressing. That's the reality. That's the problem. What are they going to do? Like, think about it. What can they possibly do besides get these inflation numbers? Like, what is going to actually get inflation under control? They have to raise rates. So it's a game of protecting yourself. That's what it is. So the game actually, like we were talking about yesterday, is learning how to take advantage of these short-term moves. What was I saying in the pre-market and morning trading session live stream with you guys this morning when you were asking what my opinion is with what the market was going to do today? We saw a lot of questions about what was going on with QE and everything, and you guys were like, "Okay, but what does it mean? Puts or calls?" And I was like, "I mean, it's not either, but if I were to say anything, it's cautious calls." You guys can go back and watch it when we were asking those when we were answering those questions. I mean, what did we end up seeing this morning? Nothing. We were on the stream the entire morning, and I was like, "This is nothing. This is just chop, 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 chop." Then it starts to make that move up. Again, I was hoping for that rejection here to play it on the way down. It did at the end of the day, coming right down to this level of support, which honestly, I don't really need to change anything going into tomorrow. China and Russia moving away from the dollar. There's been talks of that for a while, and that's really what they're doing to transact for oil transactions. When am I starting my own hedge fund? I'm probably not doing that. Why? I deal with you guys all the time. You guys always ask me for stuff. I'll just hang out with you guys. It's a lot more fun. Cautious, I don't do that. No, we're not doing the willy-nilly nonsense here. We're industrialized. Thankfully, we have SCV and RD and the 1348 crew to get us through. Yeah, I want to be a bull as much as anyone, but we have been given the keys to make money both ways. Clap. I appreciate that, buddy. Yeah, guys, if you do want to hop in there, the link is in the top of the live chat to come join us on all these live streams that we're doing. The one-on-ones are back 2 times a week. So if you guys need your questions answered on trading, anything that you guys need, they're there. Our algorithms are killing it. Trader Joe is up, 37, 38%. Pythagoras, again, still crushing it. I'm not exactly sure what he's up. Still killing the market this year. Invictus is firing off. I'll show you guys an Invictus alert from the other day. I mean, this is just one that sticks out to me because we were going over this on the one-on-one stack. This Tesla move here on the 5-minute. I mean, Invictus tells you it's coming down when? here, this candle, this green candle right here, Invictus is saying bye bye. And then look what happens to Tesla, death candles. So I mean, these algos are super powerful, and we're going to continue to tweak them and make them even better. I have some interesting things coming for you guys. But yeah, I mean, if you guys want to hop in there, that's the name of the game. It's short-term trading right now. That's really what it is. It's the weirdest thing to say, but just because like typically in typical investing, we were talking about this yesterday, like it's usually not the move, but it is now. We want pictures of your ankles. Well, you can't. So wish I would have caught the Tesla Invictus. I mean, me too. But again, there's a lot of opportunity out there. It's not like that was the only one. There's alerts firing off all the time. And we're right there to guide you through the entire thing. The curriculum videos, the live streams, the algorithms. They're so dude, the algos are sick. Do I think keeps going? My short answer is yes. The problem is that you don't know the time frame. This is the thing. You don't know. This is the problem with natural gas. You have to go into a natural gas play, one, either with way more time than you think you need, or with money that you just are fully willing to take decent hits on, because you're at the mercy of basically Russia, OPEC, even though it's oil, like they're all going to be kind of intertwined in the energy market. You're at the mercy of people doing willy-nilly nonsense shit in the energy market. So yes, it makes sense that natural gas, especially with this Nord Stream stuff, the Nord Stream explosion heating up, that natural gas would head up going into the winter months, with the continuing Russian-Ukraine conflict. But there's a lot of risk there. That's why when you guys have been talking about Oxy recently, when we're on those streams and we're trying to figure out where things are going to go in the morning, I'd stay away from it right now. I don't want to touch it. It's just there's too much volatility and the risk reward doesn't make sense. So I'm probably not going to be touching natural gas for a little bit. Maybe if I can make something free one day, I'll leave it. But other than that, I'm probably leaving it. LNG could be interesting. Liquid natural gas could be an interesting one. If you start to see the supply of natural gas continuing to drop, liquid natural gas will be an interesting one. Good thinking. Yeah, it's just you're at the mercy of a lot of nonsense there. So some of the things that we got to look at for going into tomorrow. Again, these things are going to change by the morning, but I mean, we start the live stream in the morning at 8:45, so we have 45 minutes to walk through everything, answer any questions. So again, you're going to be watching this orange line right here. Again, these are the more recent lines that we're seeing. So the orange that we have drawn out on these charts here, let's actually make this full screen so you guys can see this better. So the orange lines that I've drawn out here are from the 5-minute time frame over the last few days. The green ones are from like the 4-hour. So for those of you guys that are new here, that's why the colors are different. Good evening, Vix. Algo, what's up, buddy? So no gas, but X is calling? Nah. What are your thoughts on Druckenmiller saying the market is going to be sideways for the next 10 years? I think that is a very strong possibility, which is why when we were talking about how real estate could be an interesting move after this all settles down, I think markets are going to be interesting. I like, you got to pick what's going to be the winner, what's going to be the loser, or what's going to be the larger winner, if that makes sense. Is it going to be crypto? It could. If the dollar starts to settle down a lot, if the dollar starts to tank again and you start to see those daily cross down and like the dollar starts to really settle down, you see inflation coming back under control. Well, it would be after inflation comes under control and you can see the dollar kind of fizzle back down. Then you can go back into the crypto market and have an amazing time. But that's going to take a while to play out. The stock market, here's the problem. This whole situation right now in 2022, people like to think it's just what's happened since 2020, and it's not. This is the problem. Even Kathy Wood, when she was talking about how inflation hasn't been like inflation, she's like, oh, it's been like 18 months versus 18 years or whatever the hell number that she was using, months to years. But what she's failing to realize, I think on purpose to basically talk her book, is that the metrics of determining and calculating CPI have been changed and fucked around with so many times that when you compare the inflationary pressures on our market today versus the way that they were calculating it back in the 1970s and 80s, our inflationary environment right now is way worse. So it's not just because of 2020. 2020 was almost the last straw, and it was a last ditch effort to get everything under control and then not have a giant collapse of the world stopping production of everything. But what it really was is the long drawn out QE of since 2008. That's what it is. It's everything is coming to a head now. You have like any single time you look at a stock according to previous valuation metrics, like remember last year and the year before that, if you guys were watching my videos, I was like, people were talking about like PE and PEG ratios, and I was like, that doesn't apply to anything right now. Now it does. So you're seeing a little bit of this valuation reset in the overall market, and you're gonna find out which companies are actually like about it. And you're going to figure out like, okay, these are the companies that are actually valuable, and these are the ones that the market has artificially propped up because there was nowhere else to put their fucking money. Tina, there is no alternative. It's real estate, crypto more recently, but you had the stock market. That was it. So now that you have these situations of, okay, the Bank of the England and the UK are screwed. They're screwed. You have the United States in a weird scenario where we kind of set the tone for everything that's going to happen. Powell has so much power right now. He's wielding it, but it's not good. It's like he's damned if he does, damned if he doesn't. Zombie corporations go bye-bye. Not necessarily that. It's the companies that, honestly, newer companies that have these super high valuations. Now, here's the other thing that we were talking about that I want you guys to understand. And I called this, there are two things. There's a more recent thing that I called, and then a longer term thing that I called. First one was watch out for the nuclear threats from Russia. I think we were talking about that last week. Second thing was honestly more recently. I think it was after November we started to talk about this. Alternative investing is going to really start to pick up. Now, we don't have access to these types of things, but big money institutions do. But you need to look at where big institutions are putting their money, because like the flow of money, supply and demand is going to carry the market in one direction, whether you like it or not. You can cry manipulation all you want, but at the end of the day, supply and demand is going to rule. If there's more supply, things are going to go down. If there's more demand, things are going to go up. So here's where they go: private equity, venture capital, things like that. And at this point, it makes a lot of sense to do so because these multiples have been compressed so much. Yeah. Thanks for doing what I do, Milo. I appreciate that, buddy. But that's kind of the whole situation with the overall economy and in how that could affect markets. Now, let's talk a little bit short term here, because I think that's what's going to benefit you guys. And remember, the market right now is going to benefit short term trading and knowing where things are going to head within the next hour, more than trying to catch dips, in my opinion. Why did TLT pop? Because yields, the 10-year treasury yield got killed today. It's going to act as like the inverse to the yield. So again, guys, if you wouldn't mind hitting that like button on the stream on the way in, helps out a whole lot. And if you do want to join us, you guys know where to find us. Link at the top of the live chat over there. Make sure you guys check that out. You guys, I know a lot of you guys are in here from 1348 gang. I mean, I can't even describe how proud I am of all of you guys coming in there and just just killing the market, man. Like, I've seen some of your gains. Like, I know some of you guys aren't posting them in there because you don't want to show the amount of money you're making. And I'm like, dude, this is what retail needed. We've been talking about retail gaining the tools to take full control of this market since January. And those of you guys who have been with us for a while are really crushing it. So shout out to you guys in there. And any new people that do want to hop in there, we'd love to have you, man. But thinking about where markets could go in the short term, you have this level up here. Remember that 372.50 to 372.75 has been a key level that we've been looking at. 1348 changed my life forever. Luke, I appreciate hearing that, buddy. That's always good to hear. And those of you guys that still might be new learning, reach out, come to the one-on-ones. We are gonna get you there. 8 months to finally figure this out. Yeah, trading's hard, man. It's a lot of emotions. It's a lot of emotions baked into trading. So is this the bike gang? Sorry, there's like a gang of like kids on motorcycles that like drive through all the time. But here's where markets could go. You have this level up here that I do think we could easily touch. Looking at SPY on the 4-hour, we should be above it right now. The daily, I don't think we are. Yeah, we've got a long way to go to rim on the daily, but the 4-hour, we should be above. Yeah, 4-hour, we're above this 13. So you're seeing the MACD build this bullish momentum here. RSI is not above 50, and the ADX is losing this downtrend here. Losing the momentum of this downtrend. You need help? Come to the one-on-ones, man. We're always there. Fucking Buffett just bought 6 million more shares of Oxy. Ryan, stop fighting Buffett, dude. Please stop. You keep messing around with Buffett, and I'm like, dude, he's richer. He just has more power and influence. Nettie. Let's see. But looking at where this could go, I think you easily could see that upside to that 372.50. I think you could see it. And then I think going into the end of this week, remember, we have GDP data coming out tomorrow too. So the GDP revision data is coming out. That's going to move markets. It's for Q2, so I'm really not all that worried about it. It's still big. I'm looking more towards Q3. I lost to Buffett. I conceded that battle. Many have. Many have tried to take Buffett down. Many have lost. You didn't play today. I was cool with that. Ready for tomorrow? Yeah, that's the other thing that we talk about a lot. It's those high quality setups when all of the rules are getting followed. All the rules, knowing your levels, and you're good to go. Again, I'm really going to be waiting to see how the dollar and the 10-year are going to react tomorrow. I mean, the dollar's moving over here back to the upside. 10-year, I don't think is trading right now. We'll take a look at that. But I want to see how the dollar and the 10-year react tomorrow morning as we go into the market. Now, it's very possible that we start to slip significantly on the SPY. Any earth-shattering news for the market? Not necessarily. It's more of just seeing how this Bank of England quantitative easing is actually going to come into effect. 10-year went up a bit. Yeah, I mean, we got to say the 10-year was above 4. That's a bit wild. That's a bit nutty. So I don't know, man. I don't know. I'm trying to not like emotionally, and like the way that you would logically think about this is that the fact that the Bank of England did this is really bad. But it doesn't mean that the markets can't bounce off of it. Like think about it like 2020. Should the markets have rebounded the way they did? No. Why did they? Well, there was money getting pumped in. It's by Masterworks. Is that the company that allows you to invest in art? That's pretty cool. But here's kind of what I'm going to be looking out for tomorrow. Apple's going to be very important after that news late last night. So Apple sold up pretty significantly, then ended up going on an absolute moon mission. Watch natural gas, or I mean, I feel more comfortable right now trading natural gas, but if you like trading oil, then trade oil. And then I'm also going to be looking at TLT, keeping it simple. Lots of calls by the end of the year. Also puts. Ben, in what way? What do you mean? When can we call the bottom? We can't. We can't. Not yet. One, we most likely have not reached the bottom yet, especially after what the Bank of England did today. Second thing is you need to get the light at the end of the tunnel. I don't think that's going to come until mid to late 2023 when we really know for certain when that light at the end of the tunnel is. We might get glimpses of it, and that's going to provide us with some short-term action. But what could easily happen is you get that glimmer of light at the end of the tunnel, then another couple of data points come out, and it's like, sorry about that. We actually have to keep essentially policy at a tightened level. You think this pump could have also have to do with GDP and jobless claims reports tomorrow? No. This was all Bank of England. You almost got a huge position in Salvador Open, and I regretted not taking it. You were up 10%. It was up 10% pre-market. I thought it would go up more. Get it next time. Oh, the puts? Yeah. Yeah, Sava's an interesting one. That's one that I probably won't touch a whole lot of. That thing is crazy. Unless Slother comes in. You think there will be a supernova melt up when the all clear sign is initiated? Okay, maybe. You're thinking about it like it's 2020 V-shaped recovery. It's different. It's completely different. There's different places to throw money. What's actually going to happen first is people are going to fly into bonds. That's what's going to happen. So here's what. Okay, so this is what you can use to be like, all right, this is where the bottom is. There's going to be a TLT trade, because what's going to happen is that when you see that light at the end of the tunnel, you're going to have an understanding that yields are going to come back down. What happens then? Yeah, ENVX is interesting. The lithium stuff. So TLT up. It would be a TLT call play. So remember, we've been talking about TLT for a while, and I didn't really know which way it would be. It's been a slow decline down because yields have been increasing, but the more aggressive move, which is better for options, a quick drastic move will be to the upside. I'm very certain of that now. And here's why. Here's the thesis behind this. So when you start to see the light at the end of the tunnel, yields are going to be at an elevated level. Now, in order to essentially lock in those higher rates and have that essentially risk-free rate of return coming into your account, you're going to see a lot of big money fly into bonds to try to lock in that rate. What happens when a lot of big money flies into bonds? It bids bond prices up, compresses yields down. Well, what did we see today? How do we know how TLT moves? Well, if yields go down, TLT up. If yields go up, TLT down. So TLT up equals market down, Dixie up. Right now, the relationship between the bond market and the SPY is a little bit broken because you're seeing that flight to cash still. You're seeing people hold dollars. So there's a couple of reasons for that. One, they're trying to get inflation under control. So if you start to see basically deflationary pressure, well, then the value of the dollar decreases, which increases your purchasing power. This guy talks a lot, but I think it's because he knows his stuff. I do know my stuff. Do you recommend any other indicator to add to your trading view indicators besides the ones on the 3048 alerts? Upgraded, so now I have room for more indicators. Yeah, RSI, MACD, ADX, all the ones that we have for you. But OSU, we have those charts completely drawn out for you. You get those support and resistance levels, and you should be good to go with that, man. Those charts are included too, and you get all of them. Are your October 21st puts wrecked? I don't know. Are you at your stop? That's kind of the thing you got to think about here too, is if you're holding puts in this situation, are you at your stop? Now I probably at this point, I wouldn't have bought puts to the downside, playing it to the downside today. Do you have a way to automate the blue pill lines? I think when Gabe draws them, it comes up on your charts. So they should pop up. What I do is I look at those broad levels. The levels that you see on my chart here are the key levels that I deem as the big important ones, or the big pivot points. Yeah, when Gabe draws them, we get them. Perfect. Yeah, I mean, we're gonna, again, guys, if you guys are in there with us, there's really no we're gonna make money regardless. That's the thing. No VWAP in the alerts though. You're gonna add it to your charts. I wouldn't. Here's what I would do. This is the way that I do it. Doesn't cloud the chart too much because what we have on our charts here is you got these supportive resistance levels. All of the different moving averages, 1348 and 200, MACD, RSI, ADX. This chart right here in my mind is a little bit full. So I just have VWAP over here. So I flip back and forth between these two. So I can have VWAP here and it doesn't cloud my charts too much, if that makes sense. It's just gonna. Gabe, dude, thank you for the super, my man. Oh my lord. Oh my. Oh man. Would you like me to do anything fun for you? I'll show you my ankles, buddy. Gabe, I appreciate that. We were just talking about your blue pill lines, buddy. But yeah, guys, hop in there with us. We're gonna be really having some fun soon. I got some stuff cooking. For you guys. That's gonna be pretty cool to see. But more ankles. The last time I did this was for like $5. So I feel it. Fine. You know what? Fine. Everybody, hit that like button on the stream. Here you go. Here you go. Here you go. Everybody say thank you to Gabe. We get Boston Skyline ankles. There you go, man. In all their glory. I love that there's probably new people in here that are like, what in the fuck are you doing? Oh man, this is fun. Okay. 1348 is only getting better. Yeah, man. I mean, it's the truth. I mean, the amount of success that you guys have had. I said this before, I'll say it again. I couldn't be more proud of you guys. It's really crazy. Any thoughts on SPY tomorrow? Yes. But only, Wayne, only if you type a message in lowercase. Only if you say that exact thing, but lowercase. Stop, Gabe. Bro. Thank you for the supers. Oh my god. Okay. This is, I understand this is fun. Let's make the kid show his ankles. What? More ankles. All right, I'm looking for Wayne's message. Hold on. Fine. Here it is. Ankle. There's your foot. Any thought on SPY tomorrow? No, Wayne, it's got to be in all lowercase. We've been over this. All lowercase. And then we will go through SPY before we end up wrapping it up. You got a screenshot of the ankles? Good thing there's already an OnlyFans of it. Ankles in slow-mo. Let's see. Can your girlfriend and I crash at my place? Probably not. Sorry. I don't know. I feel like I don't know. Probably not, buddy. Full screen. Start a real OnlyFans, please. All right. Well, this is kind of what Wayne. Where are you, buddy? Just all lowercase, Wayne, and you're good to go. Any thoughts on SPY tomorrow? All lowercase. Wayne, you're not outfit your girls, buddy. It's so simple. Just don't type in any caps. All lowercase. Oh man. It's Wayne. Lowercase, buddy. We don't need to yell. I see all the messages here, pal. Any thoughts on SPY? Wayne, oh my God. Thank God, buddy. Thank you. Yes. Here are my thoughts on SPY, Wayne. Thank you for talking with your inside voice. I appreciate it very much. Because, Wayne, anytime that I see a message come through from you, it reads in my mind like this. Any thoughts on SPY for tomorrow? I'm like just deep breaths. But here's what we're looking at for SPY tomorrow. You have that resistance level right around that 372.50 to 372.70. If you continue to see spillover with the UK continuing to buy bonds and compressing yields, then the market's probably going to continue to go up. I hate that with a passion, but if it's gonna flash green at us, it's free. This is Wall Street. It's free money. We are going to take it. But if you start to see those GDP numbers come in lower than expected, the jobs report not giving the Fed what they need to see, then we could come crashing back down. Then you're in a situation with lower bond yields and lots of shit going on with the job market and GDP. Then you're really fucked. I'm Gabe Wiggins. Oh, Gabe, how is it over there? Is it like have you ventured outside yet in your windbreaker? Maybe he just talks like that? No, he doesn't. He's just being dramatic. Are these bullish relief rallies just fulfillment of the bear trend? I mean, it's relief. We were talking about we needed that relief rally. The thing is I wish it wasn't because of quantitative easing coming back in. Like, because that throws another wild card at this market here. RSI on the daily, or this is the 4 hour. Let me throw this back on the daily. It's not going to be even close to 50. RSI on the daily over here isn't even at its moving average. If it breaks its moving average and starts pitching up towards 50, yeah, we could rim on the daily here, back up to the 13, which is currently sitting at around 379. That would be a bit aggressive. You're currently sitting right under that resistance level. MACD on the downtrend is showing light pink on the histogram, so it's fading that little trend here. And again, you're showing ADX starting to pitch back up from this little uptrend that we've seen. So here's what we've seen. We've seen ADX building on this move up, losing the trend on this way down, starting to pick this trend back up. 4 hours is going to give you a little bit of a different picture here, where it's losing that trend down. So you saw it building the trend up. So basically just momentum here. Now you're seeing it losing momentum to the downside, if that makes sense. But I think that's going to wrap it up for tonight, team. So again, if you guys did not know, we are live every single freaking day, 8:45 a.m. to about 10:30 in the morning, getting you guys fully prepped for the market. Again, as things come through, you're going to get the best breakdown that anybody is capable of giving you. You maxed out on super chats for this channel? Yes, you have. Please, you're good. Thank you. I appreciate that, man. Great analysis. Love the channel. Eric, I appreciate that, buddy. But yeah, so as these things come through tomorrow, any other nonsense that comes in, I'll give you guys everything that you guys need to know before the market opens so that you guys have better market context going into the trading day. Like today, it was cautiously bullish. I didn't like it to the upside, so I was waiting for that rejection. Didn't really get it. So let's see what we get tomorrow. If the yields continue to come down and the dollar starts to slip again, you're probably going to see SPY break that 372.50 and could run to that, like, what, 377. It could go on another little moon mission into the end of the week. But the wild card is going to be GDP. And so it's a GDP revision. It's not new data. They're just revising the data that's came out, GDP and the jobs report. So those are going to be the two things to look out for in the pre-market, as well as the dollar and the 10-year. Again, watch SPY too, but SPY is going to be reacting to 10-year dollar and what is it? 10-year dollar, GDP, and jobs report. So guys, that's going to wrap it up for tonight. You guys wouldn't mind hitting that like button on the way out. Get ready for October, team. We got some, I got some sauce coming for you. I got some sauce. So I'll see you guys a little bit later. Have a great rest of your night. Peace.